Are you tired of working for your money? Imagine a world where your money works for you, generating a steady stream of income year after year. This isn't a fantasy, it's the power of dividend stocks. Today, we're diving deep into the world of dividend investing. We'll uncover how to identify companies that not only pay you regularly, but have the potential to do so indefinitely. This knowledge can transform your financial future, providing sustainable income and building lasting wealth. Let's get started on this journey to financial independence. So what exactly are dividends? Simply put, they are a portion of a company's profits distributed to its shareholders. Think of it as a thank you from the company for your investment, a direct cash payment for owning a piece of their business. These payments can be a powerful tool for passive income. Instead of relying solely on stock price appreciation, you receive regular cash flow, often quarterly, directly into your brokerage account. This consistent income stream can be reinvested to buy more shares, compounding your returns over time, or used to supplement your living expenses. Dividends are a hallmark of financially stable and mature companies. They signify a business that is profitable, generates consistent cash flow, and is committed to returning value to its shareholders. This makes them particularly attractive to long-term investors, retirees, and anyone seeking reliable income. Identifying dividend stocks that can pay you forever requires a disciplined approach. It's not just about chasing the highest yield. It's about understanding the underlying health and sustainability of the business. 3 critical factors guide the selection process. First, consider the dividend yield. This is the annual dividend payment per share divided by the stock's current price, expressed as a percentage. A higher yield means more income relative to your investment, but it's crucial to ensure that yield is sustainable and not a red flag for a struggling company. Second, examine dividend growth. The best dividend stocks aren't just paying, they're growing their payouts consistently over time. Companies that regularly increase their dividends demonstrate financial strength, confidence in future earnings, and a commitment to enhancing shareholder value. Look for a history of consecutive dividend increases, often spanning decades. Third, analyze the payout ratio. This metric reveals the percentage of a company's earnings that is paid out as dividends. A sustainable payout ratio typically falls below 60%, indicating that the company retains enough earnings for reinvestment, growth, and to weather economic downturns without cutting its dividend. A very high payout ratio might signal that the dividend is unsustainable. Now, let's explore some real-world examples of companies that have demonstrated a remarkable ability to pay and grow their dividends for extended periods. These are not recommendations, but illustrations of the principles we've discussed. Consider Company A, a global leader in consumer staples. This company has a history of paying dividends for over a century and has increased its dividend for more than 60 consecutive years. Its dividend yield typically hovers around 2.5% to 3.5%, which might not seem exceptionally high, but its consistency and growth are its true strengths. The rationale behind its perpetual payments lies in its diversified portfolio of essential household products. These products are in demand, regardless of economic conditions, providing stable and predictable cash flows. Its payout ratio consistently remains in a healthy range, usually between 50% and 60%, allowing for both dividend payments and continued investment in brand building and innovation. This stability makes it a cornerstone for many income-focused portfolios. Next, let's look at Company B, a major utility provider. Utilities are often considered defensive investments due to their regulated nature and essential services. This particular company has paid dividends for over 80 years and boasts a dividend growth streak exceeding 15 years. Its dividend yield is often in the 3.5% to 4.5% range, offering a more substantial immediate income stream. The stability of its earnings comes from providing electricity and natural gas to millions of customers. These services are non-discretionary, ensuring consistent revenue. The company's payout ratio is typically around 65% to 75%, which is slightly higher than our general guideline, but is common for utilities due to their stable, regulated cash flows and lower capital expenditure needs compared to growth companies. Their predictable business model supports these higher payout ratios. Finally, let's examine Company C, a prominent healthcare giant. This company has a long history of dividend payments, extending over 50 years, and has increased its dividend for more than 25 consecutive years, earning it the prestigious Dividend Aristocrat status. Its dividend yield usually ranges from 2.0% to 3.0%. The strength of Company C lies in its diverse healthcare segments, including pharmaceuticals, medical devices, and consumer health products. This diversification mitigates risks associated with any single product line. The demand for healthcare services and products is generally resilient, providing a stable revenue base. Its payout ratio is typically in the 40% to 50% range, indicating a very conservative approach to dividend payments and ample room for future growth and reinvestment in research and development. This robust financial health underpins its ability to pay dividends for decades to come. These examples illustrate that forever dividend stocks are often found in sectors with stable demand, strong competitive advantages, and a proven track record of financial discipline. They prioritize returning capital to shareholders while maintaining a healthy balance sheet. While dividend investing offers compelling benefits, it's crucial to approach it with a strategic mindset. Your success hinges on more than just picking a few good stocks. First, diversification is paramount. Never put all your eggs in one basket. Spread your investments across multiple companies, industries, and even geographies. This strategy reduces your risk if one particular company or sector faces unexpected challenges. Second, always conduct your own personal research. While examples and guidelines are helpful, every investment decision should be based on your thorough due diligence. Understand the company's business model, financial statements, competitive landscape, and management team. Don't rely solely on headlines or recommendations. Third, adopt a long-term perspective. Dividend investing is a marathon, not a sprint. The true power of compounding and consistent income generation unfolds over years, even decades. Resist the urge to react to short-term market fluctuations. Focus on the underlying business fundamentals and their ability to continue generating profits and paying dividends. Accessing accurate and timely financial data is essential for informed decision-making. Fortunately, many reputable online resources can assist your research. Websites like Yahoo Finance provide comprehensive stock quotes, historical data, financial statements, and news. Seeking Alpha offers in-depth analysis, articles from various contributors, and detailed financial metrics, often with a focus on dividend analysis. For more fundamental data and company filings, the Securities and Exchange Commission's EDGAR database is an invaluable public resource. These platforms allow you to scrutinize dividend history, payout ratios, earnings reports, and analyst ratings. Utilize them to verify information and deepen your understanding of potential investments. Remember, the more informed you are, the better equipped you'll be to make sound investment choices. You now have a foundational understanding of how to identify top dividend stocks that can potentially pay you forever. We've covered what dividends are, the key factors for selection, illustrative examples, and crucial investment considerations. The journey to passive income and wealth building is within your reach. Remember, wise investment decisions are built on thorough research and a long-term vision. The power of compounding, combined with consistent dividend income, can significantly enhance your financial security. Continue to educate yourself, stay disciplined, and watch your wealth grow. To help you further on your journey, we've prepared a free, comprehensive guide on dividend investing. You can access it directly through the link in the description below. If you found this video valuable, please give it a like and subscribe to our channel for more practical financial tips and investment strategies. Disclaimer: the information provided in this video is for educational purposes only and should not be considered financial advice. Investing in stocks involves risks, and you could lose money. Always consult with a qualified financial professional before making any investment decisions, and conduct your own thorough research.